Mr. Jason. Hey,
Hey, Charlie.
how's it going?
Doing awesome. How are you?
I'm doing awesome. I am excited about today for a few reasons. The first is that I've never even been interested in analyzing stock before. And if somebody told me a year ago today that I'd be excited about this, I'd be like, you are out of your mind. So you have turned me into, you've created a monster here. This is all your fault. You only have yourself to blame.
It's an okay kind of a monster.
It's an okay kind of a monster. Well, we'll find out because you haven't heard all the questions I have yet. All right. So today, what we will be discussing is live stock analysis of Swedish food company Oatly Group, which this is my first question. There is an acronym here, OTLY. I'm assuming that that has something to do with how we call them out in the stock market. What does that OTLY mean?
Yes. So that is what's called a stock ticker.
Okay.
What that is that's how companies are figured out by people, because a lot of companies have similar or the same names. So because of that, you have to have some way to figure out which company you're talking about. I've had this problem on YouTube, especially when I first started doing the stock analysis videos. Somebody would name a company, for example, and I would have to figure out what the ticker was. And sometimes it was the wrong company because companies have similar names. So we'd figure that out. So that's what that is. Those four, or it can be any number of letters actually. Ford has a stock ticker of F only. Some tickers go up to 5 letters. So that's what that is.
All right. Very cool. And so each company that's on the stock market has their own set of tickers and numbers or whatever, letters.
Yes. Tickers, they're typically letters only. Okay. When you can get into some kind of weird stuff is with preferred stock, warrants, options, those kind of things. They have they have numbers and they have different other things in there. But yeah, it's typically 1 to 5 letters for most companies.
Okay. All right. Fair enough. So today, that's the first question I had, and you just answered that. Now, why are we doing this today? Well, first of all, we're doing it because it's important information to learn. Also, you have a masterclass that teaches people how to analyze stocks for themselves, and you're about to do this live. And we didn't even practice this, right? So
Nope.
You were like, yeah, I'll do it. And
Yes.
I asked you to do this on last week's live, so you didn't even get a chance to think about it. You were like, okay, well, here we go.
Yes. No, and I love doing these. So full transparency here. I don't know anything about this company. Okay. This company was recommended by Critical Thinking. I don't know anything about them. I've never evaluated their numbers. This is going to be a completely blind case study.
Okay. And that brings me to the next thing. Critical Thinking is a person that has been joining us live, and he has a lot of very good questions. So Critical Thinking, this one literally is for you. I promised you last week that we would do this week because he's the one that asked about this company. So we're doing this for him because he participated in this. Now, if anybody else would like some information from Jason directly, we are very willing to be flexible here. Here is how you do this. You can put in your chat, and anything you're watching right now, ask a question. And if we don't cover it today, we will make you a video and do it next week. So here's how you do that. Be featured in the show. Put your questions and comments in the chat, and we will be responding to every single one that comes in.
Yes, and we can actually see comments. If you missed
we can see them.
Live, we can see comments on all platforms, Facebook, whatever. We can actually see them. So
yes, we have all the things worked out. Go us. All right, Mr. Jason, are you ready to dive in?
Yes.
All right, so my first question for you is, let's start with this. So we know that we are analyzing Swedish food company Oatly Group, but in general, what are your thoughts on Oatly as a potential investment?
So at this early stage of my analysis, I purposely keep my knowledge of the company if I don't know anything about them. Critical Thinking, yes. Awesome. Thanks for being here.
Critical Thinking, thank you.
I don't know anything about this company. And when I analyze any stocks, and like I do on YouTube or these live ones, I purposely keep it that way. Why do I keep it that way? Most people would want to know about the company. Frankly, 99% of other investors want to know about the company, what they do. And I do eventually. At this stage, though, I don't purposely look into what the company does because I don't want that to bias me either negatively or positively. How could it do that? At this stage of my career, I've been doing this for 15 years now. I've literally evaluated thousands or tens of thousands of companies all over the world. So I can tell just by reading a company's description, which we'll talk about in a second, if they might have potential competitive advantages, if the industry they're in has competitive advantages, or if there are competitive disadvantages, what the margins kind of should be in a range. So I don't want that to bias me in any way, negatively or positively. So I don't know anything about this company other than what Critical Thinking said last week. They are a plant-based food company, and that's all I know at this point.
All right. So basically, you're being a very boring, very conservative person who doesn't want to color in anything interesting at all. Was that your answer to that question?
Pretty much at this stage, yeah. No, I don't care about what the company's story is. I don't care what the CEO says they're going to do. I don't care about the huge future innovations or how they're going to change the world. I don't care about anything about that for now. The numbers have to tell me the story of if this is a good potential investment or not at this stage of my analysis.
All right, fair enough. Well, we're going to have to make this a lot more fun because so far, Jason, you're not off to an interesting start. Okay, you're off to a very factual start, but let's have some fun with this. So let's start with what, I'm sorry, I have a thing here. We already covered this a little bit, but why are we analyzing Oatly Live? Why are we doing this, Jason?
Critical thinking. Been on a couple of our lives here. He asked last week my thoughts on specifically Beyond Meat, Tattooed Chef, I think is the name of the company. I've evaluated those two. So I gave him my general thoughts on those. And then he also asked about Oatly, which I've never heard of until the other day. So we're analyzing this company for Critical Thinking today.
All right. And Critical Thinking says that I believe that big agriculture has been pushing meat, has a huge influence in plant-based stocks. What do you think about that? I'm sorry, I read that so wrong. I believe that big agriculture that has been pushing meat has a big influence in plant-based stocks. What do you think?
I agree. Years ago, I read the book Salt, Sugar, Fat.
Good book.
Which was one of the most fascinating books I've ever read.
Yeah,
You've read it, obviously, Charlie?
Mm-hmm. Yeah, and now I got to put myself on camera too, because this one, I mean, my gosh, she just like hit on a thing. So yes, I have read it. And interestingly enough, Jason, you know that I'm in a rural community. Look at my background. I am a farmer. So that book got my attention. And if it got my attention, I recommend anybody read it. And I raise what I eat and I grow what I eat. That book was damn interesting. And I will say this before I ask you that I differentiate. A farmer like I am is not the same as a corporate mass producing meat production company. Not at all. And I resent anytime I'm lumped in to those corporations that treat their animals. This call is not about that, but that treat their animals in any other way. So what are your thoughts?
Yes, I agree with that. There's a big difference because I grew up in rural South Dakota. So I hung out with a lot of ranchers, farmers, and all that. And there's a massive difference between how the individual mom and pop farmer or rancher treats their livestock or their fields than a big corporate company. So I will 100% endorse that. In terms of the book, Critical Thinking, what you said in Big Agriculture. So the reason I brought that book up is because I love learning. And I think I'm a pretty smart guy when it comes to a lot of topics, but I didn't know a lot about how things have been manipulated in a way when it comes to big agriculture. One example from the book that still sticks with me to this day is, I think this was in the 40s or 50s. Farmers in the US were producing a ton of excess milk products that were turned into cheese. But before that, cheese wasn't really used in the American diet until the US government got involved and started marketing in conjunction with these companies to get cheese into our diets. That's turned out to not be a great decision, because while cheese is fantastic to eat and it tastes great and it goes good on a bunch of stuff, it's not very healthy for you.
No, it's not.
And there's a lot of stuff like this. And I can't remember exact examples from the book, but salt is a big one. Bigger salt is another big one. So sugar. Big agriculture combined with the U.S. government they've done a lot to inadvertently market, or they have marketed purposely, cheese, other foods like that, They have marketed things purposely that have turned out to have horrifically bad side effects, like obesity, diabetes, stuff like that. So I think you are spot on critical thinking when not only big agriculture has a say in the plant-based food stuff, but the U.S. government and probably governments worldwide, frankly. I'm just speaking about the U.S. government because that was what was the focus of the book, have a part to play in this. And I think the food pyramid came into this as well. When you and I were kids, Charlene, you remember the food pyramid?
Oh, yeah.
That has turned out to be one of the absolute worst
terrible
health
advice
ever given anywhere.
Yeah.
And it was promoted in school, if I remember right.
Yes, it was. Yep. Yep. So, and I will add some things here. I might be a little bit of a pain in the ass on this call, only because critical thinking he really even hit on one of my core values too. So let's back up. Not all cheese is created equal. I'm here to ask stupid questions about stock, but I also want to represent those of us that are not vegan, that are not vegetarian, okay, but that are not diehard in your face meat eaters either. So let's clarify this. When meat got involved, that was actually marketers that did that. When cheese got involved in our diet, that was marketers that did that. It was a byproduct, and the government decided to subsidize some of these farmers. And so any good marketer would ask, okay, well, what other product can we promote? And it turns out cheese was just a byproduct of the dairy that we were producing. And so we said, well, we got a ton of cheese around. At that point, that cheese actually was healthy. And even now, cheese can be. Some of the cheese has some really good microbiomes, some good probiotics. Kraft American cheese or any Velveeta cheese, that is not cheese. That is frankenfood. That is not what people like me produce in our farms. But that is what's being pushed.
Yes.
And that is another unfairness. So as we proceed to analyze this stock, I'm going to be looking at this from a point of, is this a human-created material? Is it frankenfood that was developed in a lab? And if so, I'm going to be biased towards anything I can grow or grab from my own vine in my garden that you can see. There's a reason I sat out here today. So I'm going to be trying to weigh that before I even make a decision whether to invest in this stock or not. Is that fair?
That is fair. And I will look at it from a numbers perspective mostly, but in full transparency, I am a meat eater as well. Although, like I said last week, the vegan and vegetarian and the plant-based food stuff, I have no problem with it. Like Charlene said, I'm not a only meat, blah, 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 blah.
Yeah, right.
Vegetarian, vegan stuff is bad. I'm not one of those people. But having said that, this trend is going to continue. Veganism, vegetarianism, eating better, eating healthier, eating cleaner. It's all going to continue, frankly, rapidly. Because not just for the reason we talked about last week, we have to figure out how to feed 10 to 12 billion more people in the next 20 plus years. But these highly processed foods that we have all gotten used to and all kind of grew up with, they're not great for you. Yeah. I read something and this might have been in salt, sugar, fat. I don't remember. And again, I don't remember the exact quote, but it said something along the lines of a slice of pizza was healthier than, for example, most cereals for people to eat.
That's scary, isn't it? That's scary. Yeah.
Yeah.
All right. Critical thinking says the same thing has been happening in the auto industry. Big oil has been knocking down electric vehicles, i.e. Tesla. Oh, he's absolutely right on that. Oh, yeah. 100% right on that. And then he says, not many people are aware that just 8 ounces of meat once a week is sufficient amount of protein for the human body. Now, this one I can't speak to intelligently. I'm not a nutritionist, so I really don't know. On that. I just know that I grow what I eat and I raise what I eat. And Jason, you have choices that you make as well.
Yeah, I don't know that either. I have no thought on that because I have no idea. I trust that it's true, but I have no idea. I've never heard of that before.
But here's what we do know. We do know how to look at the stock. So let's look at the stock. All right. So let's dive in. Jason, you ready to dive in? The actual stock? Here's my question for you. What? I have to correct my spelling here because I'm about to put it on the screen. What are your tips to look at when analyzing a stock to make sure it's a good one? This is how you like to start. So what are your tips here?
Perfect. So can you guys see my
on
screen
camera?
over here?
Oh, actually, let me add that right now. Make sure that it's you. I think I can do it in this way. Forgive me, guys, because this is another new feature here. There we go. We can see your screen and you.
There
now
we
can
go.
see both of us. All right, we're all set.
Perfect. So I'm going to take you guys, if you haven't seen any of my stock analysis videos on YouTube, I'm going to take you through the exact process I do when I look at any stock.
Okay.
First thing here, ADR, that stands for American Depository Receipt. What is that? That means
what is that?
I can already tell just from those 3 letters right here that this is a foreign-based company. Now, the other day when I was doing my, not mini research, but just trying to figure out how to title this live, I did find out they were in Sweden. What this means is this company lists their shares on a foreign market, most likely, again, in Sweden or in the European markets. And then they sell some of those shares to, let's say, JP Morgan in the US, and then JP Morgan sells those shares on as ADR units or as ADRs. So people in the US can buy their stock. Foreign companies do this so they don't have to list their shares in 2 different countries. For example, if they wanted to list in Sweden and the US, they'd essentially double their fees and their cost to listing in the United States. They can get around that by doing something like this. Okay, $9.5 billion market cap. Here's one thing right here. Forward PE, I don't care for this really at all. But this showing up as negative shows me that the company's unprofitable on a net income basis. Again, price to sales, I don't care about it at all. But this being at 19 shows me that it's one sign the company might be enormously overvalued. Okay. So Oatly Group, and I'm looking at my other screen over here, which is why I'm not looking at the camera right now. Oatly Group AB is engaged in the food and drinks industry. Some of its products include oat drink, chilled oat drink, oat gurt, that's a hard word to say, creamy oat, ice creams, among others. It caters to Sweden, Germany, the UK, Netherlands, North America, Finland, and other markets. Okay, pretty straightforward. Sometimes you can tell about company competitive advantages or lack of competitive advantages here. This is pretty straightforward. These 4 tabs up here are all you need. Again, we're using Morningstar. I probably should have said at the beginning. To analyze this stock, this is what I just use the free version of Morningstar to analyze any stock. And what'd you say? Critical thinking. Look up Gary Knoll. He's been a health nutritionist for many decades. He's also a huge opponent of almost all vaccines. Furthermore, he is an advocate of natural cures. That is interesting. I will look Gary Knowles up. Okay. So you're muted, Charlene.
That doesn't help. Let me start again. So while you're looking that up, here's what critical thinking says. Look up Gary Knoll. He has been a health nutritionist for many decades. He also is a huge opponent of of almost all vaccines. Critical thinking.
That's interesting.
You are trying to get us in trouble again. Now I really think that you're our kind of person and we should definitely hang out. But in the meantime, let me carry on. Furthermore, he is an advocate of natural cures. Critical thinking is not afraid of throwing some bombs in, and we're just trying to get through a stock analysis. So where'd you like to start here, Jason?
I like that. I don't necessarily agree with all of it, but it's very interesting. And again, I'm always willing to learn and love learning. So, yeah, no, I've never heard of him before.
All right. All right, fair enough. So as we dive in deeper, then let's pull up the next question because I have a feeling we're going to be able to tie these in. Jason, what are the potential red flags to watch out for when analyzing a stock?
So when we're doing this kind of analysis, things to watch for specifically will be things like operating income, return on invested capital. When we get to those, free cash flow to sales, book value per share is another one which most people probably wouldn't think about. And we'll talk about all of those as we get to them.
All right. So how would you like to guide me here? I just threw several questions at you. What's your process? I'm going to put you on camera probably. And you want to just go through live and do your analyzation, like do your step-by-step?
Yeah. Stop me if anybody has any questions or you have questions. Stop me though.
Okay, how about this? Here's our format here then. I'm going to put you on camera. When I have a question, you'll know because I'll interrupt you, and then I'll jump on camera with you. Other than that, assume that I'm taking notes because I am.
Okay, that works.
Fair enough?
That works.
All right, Jason, get after it. Go ahead. And you want to share your screen too as well, right?
Yes, please.
Okay. There you go.
Okay. First thing I notice here is revenue has gone up pretty significantly from 2019 to the trailing 12-month period. Trailing 12-month period is just the last 12 months consecutively. The reason they word it like that is because sometimes, or actually oftentimes, companies' annual reports don't fall in the full calendar year. So they do it this way so you can tell what they've done in the full last 12 consecutive months. Huge increase in revenue. That can be a good thing. And frankly, it's not surprising that their revenues have skyrocketed because, again, the vegan health food trend is picking up. So I'm not surprised that their revenues have gone up. However, you can already see a problem. As their revenues have increased, their gross margins have gone down. That means they can't keep costs under, or that they aren't keeping costs under control, which we'll get to in a second. I can tell you which cost they're not keeping under control. When that happens, that leads to greater unprofitability and operating income. This, to me, is one of the most important numbers. We're going to look at operating income. This is also known as earnings before interest and taxes. It's also known as operating profit. All three things mean the same thing. I don't know why there are three names for the same thing, but there are. The reason I like go ahead. You're muted again.
There we go. First question here. So operating income, now I believe you're speaking an entrepreneur language. What you really mean there is operating income is not necessarily sales or profit. It's the division of that money that we are now allocating towards, what are we putting towards operating, AKA overhead. Is that correct?
Sort of. So the easier way, again, teacher mode here, the easiest way that I like to think about operating income is the profits a company produces from its operations. This is after those costs down here, selling, general, administrative, research and development, and other. That's kind of a catch-all category. But yes, it is after after cost of goods sold as well. So it is after these costs to run the business. Yes.
So it's not overhead. It's even after that. So it's a smaller budget.
Yes.
Okay.
Yeah.
Go ahead.
Yeah.
Thank
correct.
you for that. That matters to me. Thank you for that.
Correct. The reason I like to look at operating income instead of net income, which I don't frankly talk about at all in any of the stuff I do other than to use it as a bad comparison,
right?
Is because operating income, as the way I think of a stock, is when I go into investing or looking at it, thinking I'm potentially going to invest in it, is that I'm thinking as an entire business owner. Because in essence,
that's why I was asking.
Yeah, in essence, as a shareholder, you own part of the company. So that's why I want to know what the entire company does in terms of operating profits. That's why this number is super important. I'll get into why I hate net income in a little bit.
Please go ahead.
Okay. You can see that their margins that their gross margins have continued to decline, and their costs are going up because the operating margins are going down from negative 15% in 2019 to negative 21% now. What does that mean in a real world sense?
Yeah.
That the company, to do what they were doing before, they have to run faster to earn actually less profit. They're running faster and selling more stuff while earning less profit is what this means in a real world sense.
So they're on a treadmill right now going downhill.
Yes. And this is why I love looking at this stuff, is because you can tell that immediately just by looking at these numbers.
Okay, but from a business operating standpoint, are these guys newish? Are they a newer company? Are they under 5 years old? Do we know?
Their financials are showing that they IPO'd in 2019. I don't know what year they actually started as a company.
Well, then wouldn't that make sense then? Right now, they're going to be putting all of their money back into the company. It should be going downhill right now, shouldn't it? That makes sense. That jives from a timeline.
It depends. They are a growth company. I will say that. They are a growth company, and most growth companies, I'm looking for the year they started here, and I'm not seeing it. Most growth companies, like think Uber or Tesla, they do typically have lower negative operating profits and free cash flows for years.
Right.
because they do reinvest that money back into the company to
Right.
grow operations, to grow staff, to grow geographically, whatever the case may be. So
Yeah.
yes, you are right that it's typical of these kinds of companies. It's not necessarily a good thing, though, in my opinion.
Okay. But
As a
how else do you
conservative
expect they do
investor.
it? I mean, you're a business
I
owner.
don't-
How else that you should? They can't get around this, Jason. You know that. You got to put the money back in the first 5 years.
Oh, I do. However,
Okay.
as an investor for the portfolios,
Ah,
I can't think like a business
okay.
owner.
Shit. You
I
got
have
me on
to
that one.
think of, as an investor, would I want to invest in this company? Even
Okay.
though, again, I know as a business owner myself, they have to do this. From
Right.
an investment perspective, it's not necessarily great, in my opinion, as a
So-
super conservative investor.
So we have just hit our first caution for you then, even though you
Yes.
understand from business. Okay. Please carry on.
And I
Yeah.
will say, because that is a fantastic point.
Yeah.
Any growth stock I evaluate, I will find almost probably 99% of the time, I will find it overvalued.
Okay.
And because of how conservative I am when I'm investing for the portfolios I manage, that also means I don't typically invest in growth stocks.
Growth stocks mean under 5 years, you won't do any of them.
No, growth stocks could mean, well, that's typically true.
Okay.
But also, this means I miss out on things like Amazon and Google and Tesla, because they aren't producing enough profits and cash flow for how much they're growing, their stock price is growing, that I find
Right.
them always overvalued. Like, it's not even close. They're not even fairly valued.
All right. So critical thinking says, I don't currently have positions in any of the plant-based stocks. However, I think long-term. Now that's a good question, Jason.
Yes.
So right now you don't like what you're seeing so far in just the beginning. What's the next thing you look at?
Yes. And that is a fantastic point, critical thinking, because I think about the long term as well. And when I say long term, everybody's different definition of long term is different. Some people it's 6 months, some people it's 1 year. I'm thinking 5, 10, 20 years down the road. That's my definition of long term thinking.
Okay.
Okay, I'm not going to talk about net income because I hate it. I have videos on that. If you want to watch those, I have several videos. Actually, I think probably 5 or 6 videos / blog posts on why I hate net income. So I'm not going to get into that today because that's
Fair
the whole
enough.
thing. Earnings per share for the same reason. Again, earnings per share is based on net income, so I'm not going to get into that. Their share count has not gone up. That is a bit surprising from a growth stock. And frankly, that's a really good thing, because most growth stocks, if they're not profitable, they either have to issue more debt or they have to issue more shares to raise money to continue funding the company. When a company has to do that, it lowers. Companies are valued over the long term based on the cash flows and the profits they produce from their operations and the assets they have. Although that's not as big of a deal now as it used to be.
Right.
When a company issues shares, they lower or they increase the amount of shares, but they have the same amount. Let's say they have the same amount of profits. So their profit per share and their cash flows per share are lower the more shares they issue. So that lowers the share price of the company. If we saw this, like I've seen for some companies where they just have massive share dilution, let's say they went from 592 million shares to 5.92 billion shares, I would expect the company's shares to have gone straight down for that reason of the lowering cash flows and profits per shares based on the huge share dilution. So this is something to watch out for. Buying back shares is typically a good thing if the company's undervalued as well.
I have another
Or the
stupid
opposite
question.
reason. That's not a stupid question.
I told you I'd have a lot of questions. Okay, so for that, I have some experience for that because I've been around the block, working with startups, and sometimes, especially when they're VC funded, sometimes the shares really aren't. I mean, yeah, they went IPO, but what really happens is that the employees are the ones that end up diving in and getting a part of the share action. Now, would I be incorrect if I assumed that this is a good thing? But actually, what this is telling me is that they may not be growing as fast in labor as some other VC-funded companies are, or IPO companies are, which could be good, could be bad. To me, it's not either one. It's just an indicator that it's not really going anywhere right now, but it doesn't necessarily have to do with the health of the stock. It could actually speak to this company is a small company, and maybe they're keeping it small on purpose for a little bit until everybody gets their hats in order. Would I be wrong on that?
No, that actually could be. So there's examples of private companies before they come public, either taking on more money to accelerate faster, in which dilutes shareholders, and then all that. or they slow down on the funding, so they go slower so people can keep their shares. There's not really necessarily a right or wrong way to do that, but if you do issue a ton of shares and you dilute shareholders consistently, you better be growing like Uber or Tesla, or you're going to blow up at some point. And those people's shares are going to become worthless.
Yeah, and now we grow too fast or too slow, which we've seen examples of both. Critical thinking says long-term these days, 6 months to 3 years, nothing is guaranteed. That's his long-term time frame. Does that match with your conservative investing approach, Jason?
The 3 years is getting close to it.
Yeah, you got to do a little harder than that, Critical. This man will not budge. Like, I have seen him, people ask him questions about Bitcoin and all that. He's like, no, too new. No. He put his old man glasses on. He needs to be 10 years or older. So there you go. This is what you get here. Because he doesn't want you to lose money.
I never invest in IPOs. There's actually only one IPO I've ever even considered investing in. That's because we're a video game company. I've played their games, Paradox. When they became public, I played their games literally for years, so I knew they are a well-run company. But I still didn't even invest in them. Don't invest in IPOs, don't invest in growth stocks for the most part for these reasons. So,
FYI, guys, he was also called a boomer recently, so we're just going to move past that. I'm just going to move right on. All right, Jason, what's the next indicator here for the health of this stock?
Oh, that was funny. That was hilarious. You can see they're also not creating or not keeping up with controlling their costs as well, because their free cash flow continues to deteriorate. From negative 96 million in 2019 to negative 324 million in the trailing 12-month period. Again, they're a $9.6 billion company. That's not great. But
doesn't that tell us they're investing in things they should be investing in? They're investing in something.
Yes. So that's a good question. I should have brought up earlier when you brought up this point. These things are good. These kind of reinvestments are good if they are investing the money well.
Okay.
If they are not, then they're just burning shareholder money.
Okay.
So, and I'll show you guys how to figure that out here shortly.
Yes, please.
Okay. So from here, we scroll all the way down to return on invested capital. This is one of the ways we figure out if they're investing their money well. This is return on invested capital is one way to look at a company's profitability in terms of how well they are investing their capital. That's literally in the name of the term, return on invested capital, how well they are investing their capital. This is one way to see that. I have other metrics that we're not going to get into today because they require more calculations and stuff. But if I had to only pick 3 investing metrics, ROIC, free cash flow to sales, which we're getting to in a little bit, and cash conversion cycle, which we're also getting to in a little bit. There would be those 3, and this. So return on invested capital, ROIC, is extremely important. I look, and I should have said this above, for operating income margin, I look for anything above 10% positive on a consistent basis. So if that doesn't meet my threshold on operating income, ROIC, I look for 10% positive on a consistent basis too. So this is well underneath that. Again, yes, they have to reinvest in growth, but at least as of right now today, which is how you have, at least how I look at the company, how they're investing today, they're not earning a high return on capital. May that pay off in the future, in future potential growth and stuff like that, products, whatever. Yes, but as of right now, they are not.
All right, but why do you look for 10% another direction? Why 10%?
That is a good question. For operating income or operating margin, ROIC, I look for 10% above on a consistent basis, because after evaluating thousands or tens of thousands of companies all over the world, I found that, and again, this is anecdotal, I haven't actually studied the data, but I found that far fewer than 5% of all companies on earth produce consistently better than 10% operating margins and 10% ROICs. So if they surpass those thresholds, it automatically means they're a good to great company.
So going into the 80-20 rule in general?
Yes.
Okay.
Yes. And that's this entire the worksheet that I'll show you guys in a little bit.
Okay. We're
doing the visual part of it now. And we probably won't have time to do the actual written part of it today.
But because it keeps interrupting you every 30 seconds.
Oh, no. I love the question. But everything is on this worksheet that we're going through. Everything that I talk about is on here for a specific reason, because not only have I found that these are important information, obviously, or they wouldn't be on here, but they often mean multiple different things. especially things like ROIC or cash conversion cycle, which we'll get to in a second.
All right. What else do we look at?
Okay, then you go to the cash flow tab here. Free cash flow to sales. I look for anything above positive 5% on this.
Ooh, they're negative again. Okay.
So this is massively negative. And it's getting worse. Negative 47% in 2019, negative 61.4% in the trailing 12-month period again. I could tell just by two numbers, revenue and gross margin, that they weren't controlling their costs.
Okay.
This is showing up across the board in all of their margins. If companies can't control their costs as they grow, they can get into massive trouble.
Right. And whether stock or not, yeah, that's just bad business for a while. You can't sustain that. So someone somewhere is spending a mass amount of money on who knows what right now.
Yes. And at this point, it's not bearing any return or good enough return.
Not yet.
For me, not yet.
Okay. But the key is we don't know what they're spending their money on. They could be spending in future tech, future investments, future bio, whatever, but we just don't know yet.
Yes, don't know yet. And I purposely keep it that way for people who might have come in late. I purposely keep it that way because I don't care about that stuff until later.
Okay. Conservative.
Okay. So cash and short-term investments, their balance sheet is made up of 51% cash. That's a very good thing that gives the company a huge margin of safety, especially if they don't have debt, which they have only a small amount of debt. So that is very good. Now on
this though, Jason, we don't know if that cash reserve is that owner contributed or is that VC. We don't know yet, right? We don't know.
No, we don't know yet.
Okay,
correct. Yeah, we'll figure that out when we get to or to a degree, we'll figure that out when we get to the balance sheet.
Oh, critical thinking is asking, could inflation play a role? Good question.
Yes, with their business, yes, that absolutely could play a role because not only in their outputs, like again, I'm assuming it's oats, and food products, stuff like that. Prices on those are going up. Transportation costs are going up. So yes, that absolutely could play a role. Great point.
Okay, fair enough.
But again, if that's not in their control, but their ability to control that to a degree in terms of raising prices, lowering their expenses to some degree that won't hurt the business, they could control the absolute margin by doing those kind of things.
And that's where you go back to, it's still conservative. It's not a matter of, is this sexy and what are you doing with it? Because you may even agree with what they're doing with the money. It's a matter of how are you managing the resources that you have. That's what you're looking at.
Yes, absolutely.
And what are the results?
Capital allocation. And we've mentioned this a couple times on our lives, and we're going to keep mentioning it because it's one of my favorite things to talk about, but it's also one of my biggest pet peeves when it comes to companies. Is most companies, what they do is they just invest money just to invest. They don't actually see if it's giving them a high return. They don't actually work to improve their returns. They don't do those things. So they're just burning shareholder money.
And there are companies that I've seen you even appreciate and even like on a personal level. You'll even frequent them as a buyer, but you won't invest in them because of that.
Oh yeah.
So it's two different things for you. Okay, go ahead.
Yeah, absolutely. Okay, so important number down here, or semi-important number down here. We already looked at the debt. They have 84.2% of their balance sheet is in total stockholders' equity. This is total assets minus total liabilities. This is also known as book value. Typically, the higher this is, the healthier, quote unquote, the balance sheet is. When a company has a healthy balance sheet, that improves the margin of safety in the investment. Again, in general, we'll see if that's actually true when you get to the balance sheet. And that also typically increases the underlying value of the company's shares as well. So that's why.
So right now, is this looking good to you or bad?
It's looking okay-ish. The margins and the falling margins and the margins that are getting worse over time still concern me, but as of now, it's okay.
All right, Jason, I make a prediction right now. And you guys, I will eat crow if I'm wrong. But my prediction right now is at the end of this stock analysis, I am going to want to invest in this company. And Jason's going to educate me on why I shouldn't. Because I think I understand what's going on behind the scenes on this company. And as an entrepreneur, I can't help it. But Jason's going to educate me on why that would be a waste of my money. That's my prediction right now. We'll see what Jason says.
Okay. So here's one of my other favorite metrics to look at. Cash conversion cycle. This one number is the accumulation of the three numbers above it. Days sales outstanding, days inventory, payables period. Days sales outstanding is how long it takes them to sell stuff. Days inventory is how much inventory they have in stock. Payables period is how long it takes them to pay their suppliers.
Okay. So these are all percentages, right? All of these numbers?
No, these are in days.
In days. Sorry. Okay. All right.
Yes. So days sales outstanding plus days inventory minus payables period to get to this number here. What you want to look at here, though, is the trend. Is this going up? Is it going down? From 2019, it was at 76 days rounded up. Now it's at 50 days rounded up. That is a fantastic improvement. That means this is a sign the company is becoming more efficient in their operations. The reason I say it's a sign is because it's not showing up in their margins. Usually when this number goes down, it shows up in increased profitability for the company. That's not happening here. I don't really know why, but I can say that they have, this actually would be lower, but they've shortened their payables period as well. So that's interesting. I can't honestly say why this is not showing up in the margins, because usually it does.
Well, I mean, could they be competing? There are other factors in the marketplace we have to look at here. Could they be competing with the market as is right now? Unemployment, COVID, having a hard time. Maybe they shorten their payables period because it was a strategical move to do so, to keep the people in. I mean, we don't know, right?
It could be. Typically, when a company shortens their payables period, though, it's because they have to.
Okay.
Either their suppliers are saying, you need to pay us faster because we need to get paid faster.
Their credit could be going down.
Yes, their credit could be worsening.
Okay.
That could be worsening. I don't know if that's the case here, but their creditors or their suppliers may be saying, we need to get paid faster because we need the cash for our business purposes, blah, 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 blah. It could also mean that their payables period is shortening, that they may be missed payments and they're being forced by their suppliers. You are going to pay us faster or we're not going to work with you.
Okay.
That could be a thing as well. I'm assuming it's the first one because there's a supply shortage of pretty much everything. So there's a cash shortage for a lot of businesses.
So everybody's tight. Even vendors are tight. Okay.
Yeah. So I'm assuming it's the first one. In terms of the days inventory and days sales outstanding, I don't know why I'm struggling to say that. Those are both lower as well, which are typically good things. When you can sell stuff faster, when you can sell through your inventory faster, that means you get this entire cycle going from buying supplies to selling it to customers getting cash. That's what the entire cash conversion cycle is. So the faster you can turn this is what is a term when it comes to cash conversion cycle. The faster this turns, typically, again, the more profitable you become, the more efficient you become.
Okay.
It's not showing up in this case.
Okay. Critical thinking has a thought here that I think I'm going to read right now, and then we can dig into a little later. He says, healthy foods are more expensive to begin with. So I believe that when people have less to spend, they don't care about what they eat. They can get more garbage foods for less. The reason I wonder if we want to do that later is because that's a social point of view. That's not a stock point of view. I do have a couple of thoughts on that, but I wanted to bring that up to see if you have anything to say first, or if you wanted to look at this and we can go back to that. It's up to you.
Yeah, I love that thought, Charlene. Can you please remember to come back to this?
Will do.
I have a bunch of thoughts on this.
Okay, go ahead.
Okay, yeah, thanks for that. And anybody else has any comments, let us know.
Yes, please do, and we will come back.
Okay, so that's all on this tab. Over here, we want to look at the balance sheet. We want to look at the quarterly on the balance sheet because we want to see their most up-to-date information. And this is taking a little while. I apologize for that.
It happens.
I'm going to share my screen.
I'll put us both on camera.
Have these issues.
With it. There we go. Oh, you know what? I'm proud of you. While we're waiting for this to load, you closed your freaking tabs. I forgot to remind you of that today. Oh, you didn't close your tab. Jason. And you wonder why we're lagging now. Okay? You only have yourself to blame. I will put that on my checklist. Jason, close your damn tabs.
You were supposed to put that on your checklist.
I totally forgot. I'm sorry. I forgot. Look, we need somebody to keep us both in line, apparently.
Yes. Where's Mildred?
Where's Mildred? Right? Okay. So what is this that we're waiting to load anyway? What did you say this was called again?
We're waiting to look at the balance sheet, where we're going to analyze if their balance sheet is healthy, which gives more margin of safety to the investment, which could increase investment returns.
Wait a minute. So balance sheets are public information for stock companies? I didn't know that.
Yes.
I really didn't know that.
Income statements, balance sheets, cash flow statements are public information.
Wow. Okay. That's a little vulnerable.
It can be, yeah.
I don't know if I'd want my balance sheet out there all like that for just anybody like me to come and look at, any Yahoo on the street.
Okay, so I'm going to try to do this a different way.
All right.
And go with the annuals first. There we go.
All right.
Should have stayed on the other page. Okay, the quarterly is not working for some reason. We can look at the annual though. So I can't look at the most up-to-date information. That's typically what you want to do because 2020 is now the end of 2020. Companies typically report their updated financials in March, April timeframe if they're on the quote-unquote normal timeframe for reporting their information. So this information we're going to look at, unfortunately, we can't look at the quarterly, the most recent, but it's 9 months out of date, essentially.
Okay.
But we can still go over the same stuff. They have a ton of cash, $105 million in cash. That's good.
And again, we don't necessarily know where that cash came from. We just know that they have it.
Yes, I will be able to tell if that came from debt or other stuff here in a little bit.
That's why I keep asking. As a business owner, I'm uncomfortable not knowing where it came from. Cash isn't always good. I want to know the source.
Yes. On here, okay, so inventories, this goes back to the cash conversion cycle a little bit, but inventories in general, inventories and accounts receivable or trade receivables should go up or down at about the same rate. This goes back to our conversation of supply and demand a little bit that we had last time. When these get out of whack, let's say inventories were to rise a lot and receivables were not. If that were to happen, that could be a sign. Let's say it's a clothing retailer, for example. Let's say a clothing retailer, their inventory goes up a lot and their receivables just kind of flatline. They don't go up or down at all. If and when that happens, that's a massive red flag. Here's getting back to your earlier question. This is a massive red flag when this happens, when these two get out of whack, because in this case of a clothing retailer, it could mean they're having problems selling their stuff. When a company has problems selling their stuff, it means they have to discount it to get rid of it.
Right.
When that happens, that means lower revenues, that means lower profits, that means lower cash flows. So this, if accounts receivable and inventories and accounts receivable are not rising and falling at about the same rate, you need to figure out why, because it can show you massive, massive, massive problems.
Okay. Critical thinking says, I guess that's what going public means. I think he was referring to I didn't know that the financials were available in public. And I get this is a stupid question, but that's my role. I get to ask all those. But he says all your information is available, just like what they're trying to do with digital currency. I'll come back to the digital currency. The all your information is available part. Yeah, that's what, because now I'm like, oh, that explains a few things. Why some companies, because I know CEOs, most of them are good people. Some of them are more creative than others. And I can see now why they would want to be motivated to prevent some things from showing up on that balance sheet. It explained a few things.
Oh, yeah. And you can definitely tell when a company's not doing what they should be doing on their financials.
That creative math that you do in the background? Yeah, no, yes. I get it.
It's called, what is the term? It is called aggressive accounting. Is what that's called.
See, there's even a term for it. Learn something new every day.
Yes.
All right, Jason, what's next? And we're going to come back to digital currency as well.
Okay, properties.
And I will not forget these points, critical thinking, because you're stepping on my, you're instigating me right now.
They have added a ton of property, plant, and equipment.
See, did I not point out? Okay, now I got to do my dramatic thing here. Okay, did I not point out that they must be investing in something, Jason? I already said that from the get-go. And you're like, oh, well, this still could be a problem. Why is it a problem? They should be investing in a company. That's exactly what they should be doing right now.
Could be.
And you still can't recommend investing yet? No. Asshole. All right. What do we got to look at? How can we get on board with this company? Because now I'm cheering for them.
Okay. So property, plant, equipment, they've added about $155 million worth of property, plant, equipment in the last year.
Yeah, that's
from 2019 to 2020. That's an enormous amount.
That's not cheap, Jason. They're a farm-based company. This stuff is going to be super expensive. He said, sorry. Back to you.
I saw it. I'm ignoring it for now. That is a good
For
comment.
those listening and not watching, critical thinking said food for thought, no pun intended. Go ahead.
Okay, so we need to figure out what they're spending, what exactly the equipment is, why they're spending, because that they've more than doubled their equipment spend, and that does not, it's not showing up in the improvement in revenue from, I guess, yeah, I keep forgetting we're a year behind because these aren't the quarterly numbers like I usually look at. So that does, because the revenue has jumped by about double. So that does line up. Okay, so that's good.
And you know why it matters to me what they're spending it on is because what is this? How do they? I got to look at their company and see what the hell their product actually is. Because is this hydro growing? Is this ground growing? Are they working soil? Are they doing farm equipment? Like, I think I could justify it a little bit. I could understand why they were spending that much money in equipment. But if it's that much money in computers, I'd be like, misallocation of funds.
Yeah, exactly.
Okay.
But that's also why I don't care about that kind of stuff at this point either.
You should care, Jason. You should care because sometimes it makes sense. Says the person who has zero financial investing experience at all. So please do not follow my advice, anybody listening. God, Jason.
Okay, so they have added an acquisition in 2019 to 2020. I can tell that because they have more goodwill than they did in 2020 than they did in 2019.
So building relationships, that makes sense.
No. So goodwill, when it comes to accounting, is not building relationships. It is an accounting term only that has 99% of the time no economic bearing on the company. This is strictly an accounting term only that means you paid in excess of the book value of a company when you acquired something. What does that really mean? Let's say you have a company that's worth $1 billion based on its balance sheet, which is what we're looking at now, on its book value.
Okay.
Let's say a company buys it for $2 billion. That means the company that acquired them would have a $1 billion asset that shows up as goodwill on their balance sheet.
Yeah, and this is probably stupid, but in order to get that goodwill, at some point a human had to have a conversation and said, I'll tell you what.
Not when
I'll
it comes
give
to
you
accounting.
this for that.
Nope.
Really?
Accounting, that's strictly what it is. That's only what it is.
Wow. Okay, good to know.
So, and that's why this is pretty much 99% of the time useless when it comes to evaluation of a company.
Huh.
How useless is this to me? I write off almost 100% of the time. I write off 100% of this value when I'm analyzing the value of the stock. So this
I'm
means,
on board with that.
Yeah, this means this company would be worth $143 million less just based on its balance sheet value to me, because again, this is useless 99% of the time. The 1% of the time that's not useless, you're thinking about Apples, you're thinking about Amazon, you're thinking about the gigantic companies in the world.
Yeah.
So that does not fall into this category.
Good to know.
They do have some other intangible assets, which can be valuable. In this case, it's hard to really think of what, because it's not showing up as patents. If they had patents, that would show up here. Okay. So this is showing up as software and technology and research and development. It's hard to tell if that's worth anything, but it's not a huge number anyway, so it doesn't really matter. Okay. So they have increased the value of their assets only.
Well, yeah, but we saw that, right? Because they put a lot of money into equipment, so they had to have done that.
Yeah, a little under double. Let's see what their liabilities have done in that time. Payables. That's where it comes from. Borrowings from associates and related parties, current debt. This gets back to your question earlier, Charlene. So they don't have quote unquote normal debt. What this is, and this is interesting, you don't see this very often for public companies. You see this for private companies.
Right.
Borrowings from associates and related parties. What that means is insiders at the company. They've taken a loan from the insiders at the company to continue funding operations. What does that mean? Is they've probably put their shares, their private or their shares that they have, that they own, the equity that they own, as collateral for this debt to continue funding the company's operations while they're unprofitable. This can be, depending on what you think of the owners of the company and how they're running the company, this can be either kind of okay to horrifically bad.
Okay, I have a problem here because I wanted to root for this company, but I have had experience with companies doing this, and at this point, I actually only right now, I would not put my money in, and for this reason, because of what I know about how some companies are run, I don't like that idea. I've been around that block. What that means is they could be trying to inflate themselves. Maybe they want another round of VC funding. Maybe they just really want to make it work. I mean, we don't really know, and because we don't really know, that number to me is completely superficial because it could mean that they could pay their labor for the next month, or they could go under tomorrow. I can't predict that number. And
yes,
damn it, Jason. All right. I'm still willing to get back on board.
And the reason this can be horrifically bad is for the reasons you just said.
It depends on what
but
the motivations are.
It depends on what their motivations are, what the incentives. I'm a big believer in Charlie Munger's, who's Warren Buffett's right-hand man, the power of incentives.
Yeah.
When you are a debt holder, that means you own a higher position if the company were to have issues than you would as a shareholder.
Correct.
So this can lead to massive misallocated. What is the term I'm looking for? Misallocated incentives.
I like
this
that.
can lead to all of that, which again, depending on if you trust them or not, this could be an okay thing to a massively horrific thing.
Yeah, but now I better really trust the owners of this company. And right now I'm like,
yes. And at this stage, what we're going to get into today, we won't be able to tell to a real degree if we can trust managers or not. You can kind of tell a little bit.
Okay.
But that's mostly actually digging into the annual reports and stuff like that.
And I'll throw one more into this before we move on to the next. The other thing is I happen to know that there are some pretty key tax implications that people can legally do with a thing like this. Depending on how you look at it, they can get around the tax implications or take the tax hit, depending on what the motivation is. So this here is way too creative for me because I know how this can work.
Yes, there's a lot of funny business that can be done. And plus, a lot of this went to, legally, a lot of this went to cash.
Yeah. And
so if they're not spending the debt or if they're not doing the debt as they properly should, what makes you think, or what makes you trust them they're going to spend the cash well?
I'm following Jason. All right, give me something good.
To further illustrate that point, they have $105 million in cash right now. They've lost more than that in the last 12 months in operating profit. Okay. So that's not even one full year of running the company.
Yeah, that seems like misallocation to me, but I don't know for sure. So hopefully we can paint this a better picture now, because right now I don't want to invest anymore. Yes.
So total payables.
I mean, and critical thinking has a point. And this is where, I'm on board with that critical thinking. He says, it sounds like the owners of the company are all in, a little like Elon Musk. Actually, every good entrepreneur is all in. That's not what I'm hating on here. That's why I was pushing back on Jason earlier on, and he knew I was. The reason for that is because, of course, you're going to be all in. Entrepreneurship is not for wimps. And done well, it's a long-term game, and it's really, really hard. I'm not hating on them for going all in. What I don't like is there is a dream, sure, but there's also a responsibility to nurture and grow the business that you have. You have to serve the business. And sometimes business needs are a lot less sexy than the dream. And if an entrepreneur is going all in and not looking at how to serve the business, then they're going to go under. And that's why that threw a flag to me. That's not okay with me. You got to look, you got to ground it in reality, and numbers are still numbers.
Well, and the incentive structure can get messed up in these kind of situations like we talked about. Yeah. However, to critical thinking's point, yes, it can show they are all in, but I would throw a big but in that.
Yeah, he says he agrees.
You better absolutely trust that they have shareholders' best interests at heart.
Yeah.
You better make sure that they are Elon Musk or something to that equivalent, that they are going to do literally everything in their power to keep the company running, because this can, again, I'm not saying it is or it will, but it can lead to massive problems and incentives. But
and the pressure cooker is huge.
Yeah, Elon Musk. If this was an Elon Musk company, I would say, okay, this is not a problem. But outside of that,
well, we also have the benefit of hindsight for Elon Musk, so he had to get past this at some point too.
Oh yeah. No, and I've followed him for longer than most people, but so I trust him a lot.
Is there something good we can find though? Is there something good here that can get me back on board?
So this is weird. again, I need to remember this is old information because I was going to say this is weird. Their debt isn't showing up on over here, but we're not looking at the latest quarter. So we're looking at 2020 when they had more debt. So they may have paid this money off. Charlene, that short-term debt we were just talking about that leads to issues. They may have paid this off by now.
But we don't know for sure.
I can't look at this information for whatever reason. I've never had this problem. I'm not sure why that's happening, but they may have paid this off.
Okay.
And there are other important things on here, but I'm not going to get to them today because, frankly, I don't think they matter that much in terms of this analysis. So now we're going to go to the cash flow statements. Can I look at the quarterly on this? I can. Okay, so let's go back to this. Still can't look at the balance sheet. Trying everything, trying to look at it. But we do have the most up-to-date cash flow statement, which is, frankly, along with the balance sheet, in my opinion, I spend 95% of my time looking at the balance sheet and the cash flow statement. I spend almost zero time on the income statement.
Okay, makes sense.
Okay, so what we want to look at here is if and when they paid off that debt, what that's done. And these are in billions, so cash flow from continuing operations. To purchase something for $330 million, and I'm not seeing them paying off that debt. Why am I not seeing that? Maybe they haven't paid off the debt, but it's not showing up on that one screen, which doesn't make sense. But I'm not
Critical
seeing that.
thinking says that the reason he asked about the plant-based stock sector was that he hears so much positive and negative, and that's why he's on the fence. And I asked, is this helping so far? Well, technically you asked, but I'm the one using your words right now, your name right now. And he said, of course. So yeah, because that's what I'm hearing here too, a lot of positive and negative. I'm surprised how quickly I was able to get back off that fence. So I can sympathize critical thinking and anyone else looking at this, where you're coming from. Personally, I love the idea of asking the question, we're about to boom for our population. And how do we then look at new ways to feed people? I love that question. Do people like me have to always grow and plant our own food? I don't know. I don't know. But I know that I can't feed a population of 10 billion plus based on what I grow. So I want to get on board with these stocks as well. I want to invest in these companies. But right now,
Yes.
Jason, based on your criteria, I don't know that I can justify it yet. What is your assessment so far?
Right now, I would say it's a maybe on, but it's on the lower side. So when in that case for me, when it's that means it's a no. When we get to the valuation, I can guarantee it's going to be a no for me because they're going to be absurdly overvalued. But at this stage, it looks like a no for the reasons we talked about, the low and negative profitabilities that are getting worse. The issue with the short-term debt, that again is not necessarily an issue, but it could turn into an issue. But I'm not seeing them paying that off in the quarterly number here on the cash flow statement. I'm not seeing them that they paid that off. So they probably still have that. Again, it's a huge number. They're a $9 billion company. It's a $106 million loan. Is it a huge deal? No. In terms of the actual numbers, but it could be a huge deal if the company, again, if the people that gave them this loan decide to make it a big deal by forcing things in a negative way for shareholders. So at this stage, it's a no. And again, I can guarantee that looking at the valuations, it's going to be a no because it's going to be massively overvalued. And I can't even show you their valuations because I forgot they were unprofitable.
Oh, right. Yep.
When a company is unprofitable, I can't show you the valuations, but there's a but. I have a way around this. So they are a $9.6 billion company. So the way I get around this, to illustrate how overvalued this company is, this is one thing I do, and hopefully it works.
We will see. Close your fucking tabs, Jason.
Later. I won't. Okay. So what we want to find here is a company of a similar size to them in terms of their market cap. Get out of here. Ads.
Ooh, that burger looks good though.
It does.
Ad is working. Inception done.
So,
But is it a plant-based burger? That's the question. That'd be really cool.
Said Hello Food, or Hello Fresh. I've had their food before. I'm assuming no.
Probably not.
Okay, so let's go with, what were they market cap wise? 9.6. So what we want to do here is we want to find, let's go with this company because I know they're profitable because I have actually evaluated them. I think this was a while back. So what we're going to do here is bring up the other company. What we're going to do here is we're going to illustrate if a company is unprofitable, how can you value it? Most of the time, I get most value investors, if something is unprofitable, they say they can't value it. I disagree with that. So the way I get around this is comparing it to a company of a similar size and looking at that company's valuation. Okay. Close this tab.
If they're a similar size, then wouldn't we assume that they would also have to be unprofitable? Otherwise, we're not comparing apples to apples, right?
No. So we're not trying to, we actually want the company we're looking at to be profitable so we can actually see what the valuation is. So I can illustrate how overvalued the other company is.
Okay. Fair enough.
Okay. So they are profitable. Good. Okay. So this company has, again, this is exactly what I do on the stock videos. This is exactly what I do with students. They have almost $19 billion in revenue compared to Oatly's revenue at $528 million. They have $899 million in operating profit compared to negative $114 million in operating income. Last number, they have positive $509 million in free cash flow, while Oatly has negative $324 million in cash flow. The reason this illustration is powerful to me is because based on revenue, based on profits, based on cash flow, XPO is massively better company in terms of all those things.
Okay.
Massively larger, massively better, massively bigger, all those things. And yet they have the same market cap.
Okay.
That doesn't make sense, or it shouldn't make sense. Because again, over the long term, companies are valued based on the cash flows they produce. This illustrates that XPO is massively more profitable than the company. So let's see XPO's valuation.
Oops. I got you off the screen. Let's try that again.
So XPO, I don't care about price to earnings, price to cash flow, or forward PE at all. But when I do, I want them to be under 20. So these show at PE of 19, price to cash flow of 9.1, and forward PE of 18, rounded up. The XPO on these numbers is undervalued. I can tell you they're not, at least on another relative valuation that's frankly far more important, by one of the numbers below. This number here, enterprise value to EBIT. This is enterprise value to operating income. This is a far more important number because enterprise value includes cash and debt. Market cap does not. Market cap is just the share price times the number of shares outstanding. Doesn't include price, doesn't include debt, or doesn't include cash, doesn't include debt. As a total business owner, I want to know what a company's debt and cash are. And
Makes sense.
9% of all companies on earth have cash and or debt. This is a very important number.
Yeah. Yeah. And the ones that say they don't have any or any debt, I'm like, okay, you're either way too new or you're past 10 years, but you're not in the middle. You're not one or the other.
So on this number, the reason I said they're overvalued massively on this number is because I look for anything under 8 to consider the company undervalued. They have an EV to EBIT of 17.03, which shows they're massively overvalued. So if they're overvalued and they have far higher revenues, far higher profits, far higher cash flows, that means Oatly is enormously overvalued.
Okay.
At negative profits, negative cash flows, and far less revenue.
Makes sense. Actually, that does make sense.
Perfect. So yeah, and frankly, critical thinking. I know you said earlier you don't have a stake in this company, but I know again, I'm not saying you, but I know people get emotional about this. I don't short sale ever, blah, 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 blah. I have to apologize for this on all my YouTube videos. So I don't benefit from any company I talk negatively about. I also don't own shares. Any stock I talk positively about, again, blah, 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 blah. I don't want to do that. I have to do it because I don't.
All the disclosures.
I get nasty comments on YouTube. Again, blah, 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 blah. I don't want to do that. I have to do it. You can tell how much I love doing that. Again, I'm not saying this is you, but I do know that people take these things personally when I talk negatively about a stock. Again, I'm not saying you will, but maybe somebody will see this video later and they will.
We don't know.
This doesn't mean it's a bad company. This doesn't mean it's a bad stock. This means it doesn't fit my personal criteria for the investment portfolios I manage. That's all. It might meet your criteria if you're less conservative than I am, if you care more about future growth. But for me and my portfolios that I manage, this company is massively overvalued. It's unprofitable. It literally fits almost none of my criteria in terms of what I look for. And the criteria I look for helps me find great businesses, not just good businesses, great businesses, with the things that are on there. And this does not fall into that category.
All right, fair enough. And then my thoughts on this critical thinking is that, given what Jason said, I wouldn't take it as a serious investment because Jason is my financial investing guy. He's the guy I go to. However, if I wanted to, if I knew the people or if they were friends of mine or if I just believed in the company and I wanted to make a statement, put my money where I believe in things, I would, but I would treat it as a gamble. I would treat it the same way as I would treat it if I went to a casino or if I bought a scratch-off ticket. I would be willing to lose the money. And I would just do it so that I could actually say, I believe in you. Here's my money, but I wouldn't expect to actually build a future foundation on it.
Yes. Hello,
all right,
Shubham.
Oh, wait, let's go back. Let's see. Because we got some things to catch up on here. Hi, Shubham. It's nice to see you. And hello, Fresh Organic. Okay, so let's back up. So it's a no from you, Jason. That's what you were saying.
Oh, yeah. And again, critical thinking, whoever's watching this in the future, this should not be a shock if you see my other videos.
Jason's conservative. He's a bummer.
I analyzed my data before to figure out how conservative I was when it came to investments. For literally every 1,000 companies I look at, every 1,000 stocks I look at, I end up buying one. So this should not be a shock to anybody watching this video if they've seen my other videos. If you are watching this video and it's your first time seeing me,
check out the other videos.
Check out the other videos.
There we go. All right. We promised critical thinking that we would come back on some of the things he said. So now we're going to move into more of the social aspects here. Earlier on, he made a comment. He said healthy foods are more expensive to begin with. So I believe that when people have less to spend, they don't care about what they eat as long as they eat more garbage foods for less. Critical thinking, before I go to Jason for that, I would take an issue with the way you said that. I don't like the way you said that. So here's why. I believe that when people have less to spend, they don't care about what they eat. Incorrect. Point out to me one poor person who truly doesn't care about what they eat. I think instead, the better way to put that is maybe they have less options. So when you have less options, you pick what you can get. I mean, just because I'm poor doesn't mean that I don't care if I'm eating shit. I just want the best shit that I can get. Then in that case, I still care. So there's that. And the other thing is, as long as they can get more garbage foods for less. Well, that's a little judgy for me. That is a little judgy for me, only because I grew up poor. I'm very poor, actually. And I was an Air Force brat and enlisted. And so my mom, she could get 1 pound of pasta for, at that time, 35 cents for that pound, or she could spend 35 cents on a half a pound of broccoli, but she had 4 mouths to feed with the pasta. She wasn't making a decision to buy garbage food. She was making a decision to feed her family. And the reason I took issue with both of those things is I'm not typically somebody who gets triggered by social shit. Jason can attest to that, identity politics. But I want to be real careful when it comes to our food with what labels we are assigning to people so that it doesn't color our approach for what might the solution be. I don't think the question is, can we prevent people from eating garbage foods? I think the question is, how can we incentivize people to want better foods and then empower them to have the resources to get them? And it's a complicated question. So that's my thought on that. What do you think, Jason?
I think that's fair. Shubham, what we're talking about now, we just finished. I'll get to the response in a second.
Oops. I don't know if I'm live or if Jason's live. Can somebody, if somebody's watching, tell me if you can see me or if you can see Jason? Because one of us froze, and I'm not sure at this point which one it is. You can only see me. Okay, that's what it was. Jason, unfortunately, yesterday, there we go. You are back now. Thank you, Shabam. I appreciate that. Yesterday, he had internet issues. I do in my area, too. Jason, you were about to say something brilliant, and thank you so much for that, Shabam, to let me know. I was passing it back to you. What was your point here?
Yes, the screen went black. Freaked me out a little bit. I lost internet for 30 hours between Tuesday and Wednesday, so it freaked me out a little bit.
It happens.
So, Shubham, we were talking about, we were doing a full stock analysis of stock ticker Oatly, stock ticker Oatly, stock ticker OTLY. We just finished up that, and we will have a recording of this so you can see that if you want to see that. Right now, we're answering questions from people, and if you have any questions about investing in stocks, whatever, we'll get to those. Anybody else does as well. But right now, we're talking about answering some questions from critical thinking that they had during the talk. So to get back to your earlier question, I think that's fair what you said, because I got pretty poor too. And frankly, we just didn't know any better back then. We don't have the information then that we do now about how not great these foods are for you, because again, the US government, as we talked about at the beginning, had this entire food pyramid that we were taught in schools: eat XYZ amount of this, eat XYZ amount of this, and blah, 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 blah. Turns out that was horrifically bad advice, which has led to things like obesity and diabetes and the explosion in that. So I think that's fair what you said. In terms of his question, can you remind me what the question was?
Yeah, well, it was a statement, and I was taking some issue with the way he said the statement. He said healthy foods are more expensive to begin with, so I believe that when people have less to spend, they don't care about what they eat as long as they can get more garbage foods for less.
Okay.
That's what I was responding to.
I'm going to get this piece to piece. Healthy foods are more expensive. Yes, they are. And I can tell you why, because I've been asked this question before. Why are healthy foods more expensive? Because it takes more time to grow, let's say, crops. It takes more time to handle them, to process them, to get them to you in a fresh state than it does something that's processed or made from chemicals or made from whatever. That's why, and you can mass produce that stuff a lot easier than you can, again, say crops or meat. So that's why processed foods are so much less expensive than healthy foods. Is that right or wrong?
It just is what it is. Economy is economy. Economy is scale.
It's what it is. So that's why healthy foods are more expensive. So I believe they don't care about money.
Yeah.
And I think what Charlene said was perfect. It's not that they don't care, so they don't. They have to feed their families. They're going to do what they have to do to feed their families.
Making a choice.
So I think Charlene summed that up pretty well.
All right. He also said this is why he mentioned Gary Null. He's a huge advocate of healthy eating and growing your own food without GMOs and preservatives. Now, the GMO thing is something also that I compete with around here a lot. GMO gets really complicated because I don't have a choice in this. So we've got small mom and pops and little co-ops. I'm a little co-op. Sorry. Also have mosquitoes.
Yes, plant-based food.
Come for free.
Plant-based food, Shubham, what we're talking about right now, correct?
Yep. Yes, plant-based food. That's correct. So for GMOs, I can't help it. Actually, I plant my own plants here. I preserve my seeds every year. I'm the full deal. I mean, I do my canning. All kinds of stuff like this. But even when I grow my plants, I'm planting non-GMO based stuff, but the farmers in my area are also subsidized. And because of that, I don't want to get Jason in big trouble here, but I'll just drop a company name, and then I'm not putting them down. I'm just saying that in general, they tend to be subsidized. And as a result of that, seeds from Monsanto end up here. And so therefore, due to the way that these plants grow, and it's a whole scientific thing here, my point is not all of my plants are now non-GMO based. I can't help it. It's just the way that it gets populated here. So when somebody says growing your own food without GMOs and preservatives, I can do it without preservatives, no problem. But I don't have a say in GMOs. I would challenge you to go back and look at how they actually work. That cat is out of the bag. And there's really not much we can do about that. Go ahead, Jason.
This is probably going to surprise you, but I have an enormous amount of thoughts on this.
Okay. It does surprise me. Please share them.
When I was working at one of the investment newsletters I used to write for, one of the things we that I covered for them was gene editing. So this is different than GMO. The difference, to my understanding, correct me if I'm wrong, is GMO is more like you're messing with stuff on kind of a small scale, and it involves what's the technical terminology? You're messing with crap you shouldn't be messing with. You're doing it like a Jurassic Park situation. Gene editing, to my understanding, is different and better, or it's going to be better. Again, theoretically, it's going to be better because you can prove this out in the lab before you mass produce stuff. Am I saying that's correct? I have no idea. But like Charlene said, it's not going to stop. Gene editing, especially GMO stuff, might eventually. Gene editing will not. Gene editing will not stop in probably the next 30, 40, 50 years, at least. It won't stop. The reason, again, that's happening, and this isn't just gene editing for plants. This is gene editing to get rid of diseases and maladies. One of the other things we covered as part of this was we saw, I think it was proof that somebody with sickle cell anemia as an adult had been cured of sickle cell anemia by getting their genes edited. So gene editing is going to affect our food supply. It's going to affect our health. It's going to help us live longer. It's going to help us feed more people. Again, whether you think that's right or wrong, frankly, it doesn't matter, because essentially it's going to continue. It's going to. Again, GMOs is a different story, but gene editing is not going to go away.
Yeah. So when it comes to this stuff, first of all, I got to thank you again, Critical Theory, for bringing this stuff up. I love the points that you make because you get me thinking as well. One thing that I would love to tell anybody else listening to this is if you have ever said to somebody, gee, I really wish that we would get into a place where we can do non-GMO and non-preservatives for our food. My response as a farmer would be to come back and say, I agree with that in theory, but I challenge you to go and actually look at planting. I actually, with respect, would ask you, what do you know about farming? And that's not me trying to be an elitist or jerk or I'm a country but actually really would ask, what do you know about it? Have you ever grown your own food? And the reason I would start there is because that statement is a bit of it's a good talking point, but a bit of a misnomer. I think a better statement for me from experience would be, I would like to see people have more access to knowledge about choosing. Can we make it easier for them to grow their food or raise it if they choose to do that? And can we make it easier and more accessible for them to buy it? And then can we also educate society in general for when or where to make that decision? I think it's not as easy as just somebody saying, we should just do this. Okay. But somebody like me who buys very little, yeah. Oh, see, Shabam,
that's awesome.
He has 82 acres of land. So I'm wondering if he understands where I'm coming from here.
Yeah.
When it comes down to, okay, what you're saying makes sense, but the practicality doesn't exist. I think that's what I'm trying to get at. But I would certainly be open, and I'm still open to looking at more stocks with Jason like this, to finding other companies that I can believe in that are doing this and advancing this in a very practical way so that we can get past this whole, we only have to buy everything we need and the government should subsidize it, or otherwise we're all just going to die and starve and whatever. I feel like that's a big extreme too. They can be somewhere in the middle. What do you think, Jason?
Well, and again, I take the super practical, super logical, super nerdy approach.
Yeah.
It's not going to matter because no matter what any of us think about this is because, again, we can't stop this.
No.
We're not going to change it. The gene editing cat is out of the bag. It's not going to go back away. And frankly, we've been editing crops and stuff for thousands of years. Anyways, yes, that was human caused. It wasn't the kind of weird science fiction stuff, but we've still been doing it.
Yeah.
For thousands, tens of thousands of years.
Yeah.
This is just the modern day technologically advanced version of it. And again, it's not going to go away. It's just not.
Yeah. Interesting discussion today, Jason. I don't see any more questions, but I will tell you guys, Shabam, if you have anything or further comments to add, or anybody else has any questions, let us know. At this point, I'm going to look at our notes and make sure that we covered everything we wanted to cover today. So you went through your process, you went through all the things to show, even though it looks extremely simple, we did do this, and how to use this yourself. Okay, now, Jason, I like this statement here. You said you want to show us how to do this ourselves to potentially find great stocks faster in 25 minutes or less. Now, on that one, I do feel like my brain is full, honestly. I'm not trying to end the chat, but on new learning today, my brain is full. But where can I find information on how to find stocks in 25 minutes or less?
Yes. So you can learn how to do this process we just went through. It took us, what time are we at? About an hour and a half.
Yeah, and I was interrupting you like every 5 seconds. So
yeah,
it's
which
even
is
quicker
fine.
than that.
I do that with students too. But when you get good at this, I literally, the entire process we went through, I do it in my head in like 20 seconds.
Yeah.
When you get good at it, you can go through it really fast. And that helps you evaluate stocks faster. When you actually do the full worksheet and you get good at it, you can do that in 25, 30 minutes. That's where that 25 minutes saying comes from, frankly, because I put 20 seconds in there. People would say I'm full of crap and this is impossible, blah, 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 blah.
And then they hate you and then they call you a boomer and all kinds of bad names.
Yeah, like last week. But you can learn how to become a better investor faster and how to evaluate these stocks faster like this and like we did today in a very analytical, logical approach in our value investing masterclass, which you can see at the link below, mastermind.valueinvestingjourney.com. In this program, you'll learn everything that I have learned over the last 15 plus years of being in this arena. So you can invest and value and evaluate and find great stocks like this for yourself. We teach students from all over the world with this. Right now we have students in UAE, Italy, China, US. I think I'm forgetting one.
Canada, I think.
Canada. Somebody's from Saudi Arabia, but they live in the US, I think. I haven't got clarification on that.
Oh, I didn't know that. Cool.
But you're from India. Awesome. Yeah.
We're global.
We teach people all over the world this stuff and would love to have you in the masterclass again. Anything you want to know that I've learned over the last 15 years on how to find and evaluate stocks better and faster, why should you have to listen to, or why should you listen to anything I have to say? In the first 9 years of my career, I produced average annual investment returns of 23.5% per year on average. That puts me just behind the great Warren Buffett in the first nine, when compared to the first 9 years of his career, when he produced 24.2% average annual investment returns at his Buffett Limited Partnership. I've almost tripled the market in the last 9 years, and my numbers legitimately make me one of the best stock pickers in the world. Charlene can attest to this. I don't like saying this, but
he hates it.
I hate it. But the reason I do is because I want to illustrate to you, I want to help as many people as possible. And why should you trust me if you don't know what my investment returns are? Especially if I already post them publicly, which I do, and most people do not. So if you want to learn how to value and evaluate stocks better, faster, more efficiently, to find great stocks, great potential investments, we'd like to have you in the masterclass. We also have bonuses as well. Do you want to hear about the bonuses? When Boomer talks people.
That is going on a t-shirt, CT. And I'll send you one. I'll make you a deal right now. And I mean this, Critical Thinker. If you ping Jason and tell him if you want to give him your address, I will make that shirt and send one to you on my dime. Because that's perfect. I love it.
If you do, email me, DM me, so you don't get your stuff out there publicly.
Yeah, and I'm gonna send Jason one too.
That is
right. That's my thank you to you.
But the bonuses, we've just added a couple more bonuses that are worth $9,000 value, including the Value Investing Blueprint that we haven't actually released anywhere publicly. It's a 50-page document with resources, 28 video resources on how to go through my exact process, including stuff on terminology, why I'm doing certain things, why you should do certain things, 20 different videos, exact URLs to where I look for stocks. Please mention your firm's website.
I got it.
Is the main website. Mastermind.valueinvestingjourney.com is the link for the masterclass.
And I'll drop it in chat for you.
Perfect. That thank you. That bonus is only available. The Value Investing Blueprint is only available for first 10 people because we have planned next year to sell this for $5,000. But I'm giving that away for free to the first 10 people that sign up. We've already got 2 for sure, another 2 potential, and we got more mailings going out every day on social media and everywhere about this. Also get free live training sessions with me as well, where we can talk about anything from teaching you investment terminology to evaluating stocks, like this with you, for free. Anything you want to learn in these sessions, these 2 bonuses, again, for the first 10 people that sign up only. Again, the mirroring, I'm not ever going to use that.
I know, I do the same thing. I'm like, camera is somewhere.
Yeah. For the first 10 people only, again, we've already got 2 in. Those are 2 brand new bonuses we just added. We actually haven't even added it to the sales page yet for the masterclass, because we're trying to sell it out to people who really want to join first. But yeah, if we'd love to have you in there, Shubham, Critical Thinking, whoever else is watching this either live and hasn't commented or in the future, we'd love to have you in there. But again, those 2 bonuses specifically will only be available for the first 10 people that sign up.
But honestly, truly only if you are the kind of person that actually does want to use the information. And I say that because this, you guys can tell, I hope you can tell, this is a grassroots effort, and Jason's been in business for a number of years now. This masterclass is something he had to do. He could just keep, you wouldn't say this, Jason, but you could just keep managing the portfolios you manage and you'll be fine. But this masterclass is to spread the word to the people who can't hire financial investors, that feel like the financial world is unapproachable. And you have a problem with this. Financial literacy is still something that you talk about every week. You have a real problem with this. You want people to be educated in financial literacy, and you feel like it would be great if we taught it in school, but we don't. So that is why you're doing this.
Yes. No, and I'm glad you brought that up, because that is 100% why we're doing all of these lives is you just open an E-Trade account.
E-Trade account. I
love that.
Okay, very cool. Jason approves. Boomer approves, CT.
I've never used E-Trade personally. I don't necessarily love that.
Sorry,
but opening up your own investment account and investing yourself is awesome. And that's why we do all this stuff, so you can have the skills to invest for yourself and have the confidence in yourself. And frankly, I don't even know if I shared this with you, Charlene, but I do have a story, since you said you opened up an E-Trade account recently, Critical Thinking. When I first started out, this was probably 10, 11, 12 years ago, something like that. It took me years to get to the point where I was confident enough in myself to invest real money.
Oh,
wow. The first 6 months I invested, my portfolio was down 50% in 6 months. Why was it down in 6 months, 50%? Because at that stage, again, this was 10, 11, 12 years ago. At that stage, I didn't even know what the companies did at all. And I only looked at their numbers and ratios to figure out if I should invest in them or not. And when I say look at the numbers and ratios, it wasn't like the analysis we just went through. It was literally like 3 numbers. And I was like, oh, this looks good. And I invested. That's why I lost 50% of my money in the first 6 months of.
You don't want people to do what you did. Do not do what Jason did.
Don't do that.
Now go to the masterclass and do what he now knows.
Yes.
Which is a better way to go. Shubham says, I am thinking about building my own IT park. We're working with the government of India. That's exciting. And we are here to change the world in a better way than yesterday. I'm on a mission to make the world better for our upcoming generations. Love it. Love that. Love it. In whatever way you can do that. And listen, I really, and this is why I love these kind of discussions, Jason. We can meet people from all over the place, and I don't care what your political affiliations are, what your walk in life is, where you live in the world. If you want to make it a better place and you're actually doing something about it, which is what he's doing, it's good.
Yes.
Should have bought a Tesla, Jason.
I should have. Shubham, if there's any way I can help you with that, again, I don't know how I would help you with that, but if you just want to bounce ideas off, let me know. Critical Thinking, you should have bought a Tesla.
I'm glad I said that to you.
That will be my next car purchase, will be a Tesla.
I can't. How am I going to charge the damn thing? I live in the middle of nowhere. I love Tesla. I love the technology. There are 0 charging stations. So
we get a charging station in your house?
Yeah, and then do what? When I go on a road trip, I'm going to drive from here to my other cousin in bumfuck nowhere as well, and I can come and meet you if you live, what, 2 hours away from me or less? How's that practical?
According to the maps, you should be able to get all over the United States with charging stations. I don't know if that's true, but
I call bullshit.
I live in the Tampa area, so.
Yeah, I'm in rural New York. I need to be able to have them prove that out. Here's what I think. I believe that they mean what they say there, but I don't think that they even know. There's no way to get here from there. I don't even think they know where here is. So
Sure.
once they can actually prove that, meaning I got to know somebody in the area who actually knows where a charging station is. Bob, you know a charging station? Yeah, I do. It's right down here at Jones. Then I'll get a Tesla. Other than that, it doesn't exist. Fair enough.
That we have a Tesla charging station actually about a 5-minute drive from my house in a Winn-Dixie, across the street from a Winn-Dixie.
Nice. Hey, that's convenient. Charge up, get your groceries. Isn't that what we do now? Gas up, get groceries. That works out.
Yeah. No. Yeah. So that will be my next car, critical thinking. Although I will drive my current car until it's falling apart. So that could be 5
There
years.
is that as well. We are both in the United States, Shubham, and critical thinking is. He's also from the United States. So you are speaking with 3 Americans right now. Mr. Gentleman from India, it's very pleasure. This is why I love social media, stuff like this, when we can meet people all over the world. It's exciting.
Well,
I love
it's funny while I'm bringing up where exactly Oviedo is. Hopefully that's how you pronounce it. I've actually never been there. When we were doing this masterclass years ago and we first started it up, because we're just relaunching it now, we on one call, we had me in the US, we had a student who was living or who's from Australia but was in China.
Oh,
We had
wow.
a student in Italy and we had a student in the UAE, all on the same, and he's from India, all on the same call talking to each other. And I was like, man, this is so freaking cool.
Isn't that awesome? But listen, Shubham, I don't know if Shubham, am I saying your name right, first of all? And if I am not, I apologize for that. But Jason, I think I stepped on you when you were saying that you could help. I think my camera's getting dark. There we go. You were trying to tell him you could help, and I think I stepped on you because the Tesla thing cracked me up. I didn't mean to do that.
Oh, no, you're good.
You want to help him out.
Yeah. If there's any way, I don't know how I could help you. That's not enough information, but I could help consulting, just bouncing ideas off, valuation, just general business advice, all that stuff. And I would love to help. I love helping other entrepreneurs. 25 miles east of Orlando. So Orlando's about an hour from me. So you're about an hour and a half from me. So we should meet up sometime.
You should meet up sometime. Both of you are very exciting, enthusiastic. We like you, kind of person to reconnect. Perfect. Reach out.
Yes.
Reach out. We are responsive. I like it. Reach out in direct messaging, especially after this. And Jason will be in touch, or somebody from his team will. He's got a great group of people that work with him. In fact, the EA, our operator, is from the Philippines. So more culture.
Yes.
All right, Mr. Jason, I think we're about ready to wrap. What do you think?
I think so too. Shubham, my email address is jasonrivera@valueinvestingjourney.com. Jason Rivera, RIVERA @valueinvestingjourney.com. Critical thinking. If you want to email me about anything, same with anybody on this call or seeing this replay. Originally from New York, Snowbird.
Hey,
I'm originally from
hello, Yankee.
My dad was in the Air Force, so we lived all over the place. But I come from South Dakota down here to Florida. So awesome.
All right. So in the meantime, today we've talked about Oatly USA, Oatly stock, actually. And unfortunately, right now, it looks like they're not ready to be invested in for a wise investment. But we decided that if we wanted to make it a passionate investment, then sure, as long as we're willing to lose the money. Now, it sounds like to me in general, Jason, that your approach really for plant-based foods really is they just don't have enough time right now. They're just still young.
Too early.
You're not saying never. You're just not saying not yet. Or you're just saying not yet. Is that right?
Yeah, for me, in the portfolios I manage, how conservative I am and as an investor, I require high margins, balance sheet strength, profitability, cash flows, all that stuff. It's just too early. And I think we talked about this on one of the other lives. It's called a first mover advantage. And typically that's known as a good thing. Typically in the investment space, it's not though.
It's not good. Don't be the first one.
Yeah, because then you get the arrows in the back is the same. The first person to go, or the explorer that goes west, I think is what the saying was, gets the arrows in the back.
Yeah, let's not do that.
Typically not a good thing in the investment space. And yeah, it's just too early for the plant-based food stuff, even though I see it coming, even though it's going to transform the world, I think, and help us all. It's just too early from an investment perspective for me.
All right. And I am dropping Jason's email in chat in all the channels, even the ones that people aren't talking to us, because why not? And that's all I have for today. So, Jason, you and I are back to Wednesdays every week now because I'm done with my shenanigans for seminars and things like that. So Wednesday next week at noon Eastern Standard Time, we are back to discuss something very cool, which I will wait and tease these guys on because, frankly, I don't remember what it was, but it will be amazing.
We have a list, but I don't.
We have a list. We do have a list, and we did do the research on that list, so it'll be very good. And I'll see you next week, Jason. Thank you for today.
Awesome. Thanks, Critical Thinking.
Thanks, Critical Thinking, so much.
Stream.
Hey, Critical Thinking, I mean about that T-shirt. Get that information. I'll get you that T-shirt. Bye, Shabam. It's nice to meet you.
Thank you as well. And yeah, be in touch. And after the independence of America, spend a lot of reforms in that. Thanks. Thank you. Yeah.
Very cool. All right. Bye, guys.
Thank you, guys.